Good evening, everyone. Adam here from Bull Logic, running through our market analysis with you. What an exciting day today. Pretty much no fun for anyone because it was a very tricky day to trade. Let's look at the 15-minute chart here. That way we can see what happened today. In the morning, we got those good ISM numbers. We had a beat on our economic news. Market started running in the morning, really put in some highs up about 1% at its peak. Then we started to fade a little bit, and we started fading. When we're getting this fade, it looks like a nice bull flag. We're waiting to push a little bit higher. This is going to be our day to run. This is going to be the day for the bulls. This is now their chance to step in and take this. But unfortunately, the market started to break down in the middle of the day. That nice, beautiful bull flag turned into a nice, pretty bear flag here. And then we just broke down into the close. So we were up 0.27% in the S&P, but the day was pretty much a wash just because we did fade pretty much the entire day from our morning highs. We are still struggling with that 20-day moving average right now. We're holding a little bit above it, just kind of washing around in this area, trying to figure out which direction to go. I would almost expect a spike down tomorrow and then maybe a buyback just to see, test both directions, kind of trap the bulls, kind of trap the bears. Remember, the market likes to add in the most pain to as many people as it can, so trap them all, and then they all feel the pain. One thing to note here is we are still in a solid uptrend on this market. Any test of this lower trend line would be a positive move. Actually, any test that is above this 1397 is positive because right now this is our main lower low. So as long as we hold above that level, it will be still in an uptrend. So even though we're talking about being bull and bear, because we have a lot of people tell us today that, oh, you're bearish now, so you're going bearish. So no, we're not bearish. We're still bullish. Just in the very short term, we are being a little bit more cautious here. The market still has a nice run up from June. We're putting in new highs. A couple weeks ago. So we're still overall bullish just because, again, we're holding above these supports, that 20 to 50, the 200, all rising supports. We're still in this upper channel. But right now we are a little bit more cautious just because we have a nice bear flag forming. We are trying to lose the 20-day moving average. Bulls haven't stepped in when they needed to. So we are a little bit more cautious here. But overall, we are still bullish on this market. And until we prove otherwise, it's going to be at least a drop down of the 1400 level, in this area below that 50-day moving average. That's when we'll start, readjusting our viewpoint on the, intermediate trend of the market and maybe turning a little bit more bearish. NASDAQ, same story here, washing out in this middle section between the support and the resistance, down actually for the day. A lot of that can be due to the Apple being down 1%, hitting this support of that 655 level. We talked about this being a eventual head and shoulders. You had that left shoulder, the head, and then we are looking for a right shoulder to form. It doesn't look like that's actually going to happen. It looks like it's just already going ahead to test that area, and it might actually break down. When a stock tests an area a number of times, like this one has, it's going to suck up all that support that's in that area. And sooner or later, there's just going to be nobody there on the other side to take that trade, and sellers are just going to have their way. And I would actually expect a test of the 50-day moving average in the next couple of days. And a lot of people are watching Apple. A lot of people are watching this test of that 50-day moving average. It's going to be a big buy spot for everybody. I wouldn't suggest buying it right away as soon as it hits that 50-day moving average, just because everybody's going to be watching it. I would actually expect it to wash out below and then perhaps buying back up through that 50-day moving average. So definitely something to keep on note here. It's definitely going to be a big spot for a lot of investors and traders, is going to be that 50-day moving average. So keep that on watch. Russell up a little bit more today, 0.34%. Nice little doji candle they had this morning or today. Still fighting with that 20-day moving average and that 848 resistance line. We're definitely going to see if we're going to test this lower support here in the 835 level come tomorrow. One thing we were shouting out today on the tweets is how the VIX was up all day. This is usually a bad sign on an intraday basis just because the market is not believing the rally. So this is what made us cautious going throughout the day, is that the VIX was actually in the green or slightly red pretty much the entire day. So it did finish up 3.75%. Again, we were talking about how a run-up should happen in the VIX going into Friday. That is our big employment situation where we get the non-farm payrolls, the unemployment rate, stuff like that. So that's going to be a big day for news. So I expect a little bit more elevated VIX going into that day. So definitely something that we need to be mindful of. Tomorrow, though, there are not that many economic reports. We got the auto sales and truck sales at 2 p.m. You know, nothing real big there unless you're holding Ford stock or something like that. But so pretty quiet day on the economic news. So we're just going to have to see if the market is going to be able to hold our support, hold that 20-day moving average, and let's see what's going to happen here. All right, everybody, good night and good luck tomorrow.